our interest in American Express goes up every year. They bought in 6% of the company last year, and in the first quarter, they bought it at a rate that was more than 6%. So when our interest in a wonderful business goes up 6% a year without us laying out a dime, I love it.
Warren Buffett's the largest shareholder of American Express. 15% stake in the company, about, Warren?
It goes up as they repurchase shares, a little more.
Okay, so let's talk about that. It's down 15% year over year. IBM, which you've loved to take a big position in lately, you've taken a really big position. What does it stand at now?
I think it's about 8% of the company.
8%. That's down 15% over the past year. You know, the question is, have you overstayed your welcome in some of these stocks that perhaps some of your followers and shareholders feel time to get out of?
If we like a business and it goes down, we just buy more, and we hope the company buys it in, and our interest goes up. And I would just as soon have, well, I would prefer a stock I'm buying to go down.
But that's crazy, Warren. Explain why.
Well, it's because if I'm going to eat hamburgers for the rest of my life, I'd rather have hamburgers go down in price tomorrow and the next day and so on. And if I'm buying a business and I can buy it at a cheaper price, I mean, we just bought a company called Precision Cast Parts. You know, I wish I could have bought it cheaper. Right. If we buy IBM, I hope we can buy more cheaper. And when they repurchase shares, in effect, they're buying it for us.
Look, you buy as a long-term investor. You have always said that, so you don't get nervous when something's down 15% over the past year. But what about these companies, these older state companies that become complacent and then invite, I don't know, your friends over at 3G Capital who came into Kraft and Heinz, and they enter and attack because the companies have gotten too complacent?
Well, sometimes complacency is a terrible disease, whether you're a new company or an old company or an individual or whatever it may be. I've said that it's the ABCs, that arrogance, bureaucracy, and complacency, and you've got to fight that, whether you're Berkshire Hathaway or U.S. Steel or you name the company. But you have to fight it if you're Facebook. I mean, success tends to breed what I call the ABCs, and good managements fight it off.
Well, IBM, do you think it has maximized its brand potential?
I don't think they're complacent at all. I think that they're working very hard to adjust to differences in what people expect in IT departments and so on. And I think there's a lot of competition. I think they're a very good company, and we'll see how it all turns out.
We know you love Coca-Cola. We know you drink Coca-Cola. But there was a shareholder question that really caught people's eye, ear, attention during the shareholder meeting, and it was in essence asking, why are you investing something that rots your insides?
Well, it has sugar in it. I mean, and sugar is in thousands of products. They had 3 candy bars on the table there, and each one of those candy bars had over 200 calories, mostly sugar, and that's far more than in the 12-ounce can of Coca-Cola. I mean, if you don't like to eat sugar, there's no, give it up. But I like to eat sugar, and I'm 85, and I've been eating it all my life, and I'm going to keep eating it. If you gave me the choice of living to 100, eating nothing but broccoli and asparagus or Brussels sprouts, or living to 95 and eating everything I loved at every meal, which one would I take?
Then you must not have loved Mayor Michael Bloomberg's effort to get rid of the biggie gulps and the heavy sugar drinks. Do you feel the government should get involved in things like that?
Well, I think if you don't like sugar, I mean, if the government decides you shouldn't drink colas, for example, that means they should get rid of all sugar. And the average human in the United States, I think, takes something over 125 pounds dry weight of sugar a year. So it's a lot of products you're going to get rid of.
Yeah, they shouldn't just hold soda, is what you're saying, to one standard.
Well, the sugar isn't any different in the soda than it is in all kinds of other products.
Speaking of sugar highs, the Fed has given the markets a sugar high. I know that's a real twist here.
Yeah, right.
I'm making a segue, folks.
That's okay. You're doing fine.
A little obvious. But the Federal Reserve has kept us at such low rates. A year ago, when we sat here, you said, if it were me, I would not tighten rates. The Fed didn't listen to you, Warren. It tightened rates in December, and now there's word and a feeling that they will continue to tighten rates maybe 1 or 2 times the rest of the year. Can the U.S. economy handle that? Oh,
we can handle it, but I actually think they've tightened rates less than was expected a year ago.
Yes,
by the way, no, they've, and I think in part they've been restrained by what's going on in Europe, which is why I explained a year ago that I thought it would be tough to increase rates a lot, and I think it has been tough to increase rates.
I'll ask the same question I asked a year ago. Would you, if you were running the Fed today, tighten rates again in June?
I probably wouldn't. But that is not important to our investments. I mean, that does not enter in 1% to any decision we make on buying a business. So that's not a matter of concern to me. You know, what is a matter of concern is where a business is going to be a year or 5 years or 10 years from now. And 5 years from now, we won't remember when the rate hikes or decreases took place or anything of the sort. We'll look at the business and whether it's earning a lot more money.
Boy, he has a long-term outlook, folks. He really